Hey everyone, I'm Pete Carmasino here at Chaikin Analytics. I'm the Chief Market Strategist, and each and every week on the Chaikin Power Feed video series, we review a few articles, or at least one article, where we talked about some things that we want to kind of bring to life here in the video a little bit. We're going to look at some charts, and really, there's been several articles in the past week that have talked about the tech and the QQQ, which is the NASDAQ 100, which is heavily tech weighted, that specific index and that specific sector itself. Having underperformed other sectors. We're talking sectors like industrials, materials, and even gold and silver. And what I wrote about was a little bit something that was reminiscent of what happened in the 1970s. It was stagflation. And in no way, shape, or form am I making that prediction. However, I am looking at the specific sectors that decided to outperform the tech sectors in this previous 1 month period. Now, again, it's a small sample size, but however, that's how trends start. I'm not saying that's what's happening, but you can't deny the actual returns. Some of them were pretty stellar. So all I'm going to do today is I want to look at the Qs and I want to look at XLK, and then I want to just look at the several sectors that did outperform. But I am going to show one tidbit on our dashboard, which kind of looks at all of the sectors over, say, a previous calendar month or even 3 months, just to see where the performance has been coming from this year so far. All right, remember, I just talked about several sectors, but I did mention gold and silver as well. Silver being in the 1 month period, again, this is a rolling 1 month, so it's going back to March 4th. It's not capturing the entire month of March. I understand that. However, in that 1 month period, again, 20 some odd trading days since yesterday, you're seeing silver outperform almost all of the other sectors, including the QQQ and the SPY, which are kind of like here in the middle. The bottom sectors are real estate and bonds and healthcare and things of that nature. But here's technology living down here in the bottom sector. You don't typically see that. It's a rare occurrence, which is why I thought it was worth pointing out in this particular sense of what's happening. Now, if I go over here to my workspace, I can just pull up the Qs real quick. And again, if you look at the article where we talk about the riptide happening inside the market, we talked about the Qs kind of breaking down a little bit. Again, nothing alarming here, not really a trend change, not yet anyway. If it starts to break this trend, of course, we might think differently, but that's not even happening or even close to happening. The same with the SPY. It's really in a great upward move. However, there's these little tidbits. On the surface, the index looked good. And that was kind of the idea behind the riptide headline. You start to look at industrials, we're starting to catch a little bit of a wave here, right? We're getting a little bit of a movement into this sector. I would call it rotation, but I know for a fact that in the 70s, these specific areas did well back in that area based off of the word stagflation. And what is stagflation? Stagflation is basically when you get slow economic growth and rising prices, or in other words, inflation. Now, we're seeing inflation stay sticky. However, we have not seen slow growth. Not yet. Some aspects of the market, of course, but not really happening. We talked about materials being the other sector doing well, as including industrials, and that's really shown some incredible strength here, again, on the upside. So these two main sectors doing a lot of the work here above, say, the indexes and technology sector. But you can't count out the precious metals like gold, GLD, which has done well, and also silver, SLV, and last but not least, even oil, represented by the U.S. oil fund here, USO, has actually started to perk up, no pun intended, a little bit as well. All right, folks, so that's really the video this week, talking about, again, the riptide. And a riptide is something you can't see, right? You look at the surface, you're seeing the water, it looks beautiful, but underneath, there might be currents that are cross currents and pushing or pulling swimmers or fish or whatever in multiple directions. Now, we're seeing some things change underneath the indexes. And why do I say that? Well, that's because the S&P 500 is made up of multiple sectors. Those sectors tend to outperform. Now, when you see the leading sector fall back and other sectors move higher, it does feel like a rotation. Again, we're just calling it out. Could be the beginning of something, or it just could be folks running after sectors that have just underperformed and feeling that's maybe a safer spot to be. Time will tell, but right now, that's what we see. Take care. We'll see you next week.